What is up, guys? Techie here, and today I want to discuss the relative outperformance of GMX and GLP in this bear market, because right now, there's not that much attention in the crypto markets, right? I'd expect this to continue, and I'm going to continue to focus on making evergreen content, so content that's going to be relevant 1 month, 2 months, 3 months from now. I know I haven't made a video in a couple weeks, but don't worry, I've been working on this video. It's been in the works for some time, and next week I'll drop maybe like an hour-long video, right? So hopefully it's gonna be a banger. Maybe not a banger, because if the token price dumps, then I just wasted all this time for nothing. But just focusing more on long-term fundamentals instead of just getting caught up in like the bull market noise, right? So let's talk about this, and I'll discuss these graphs later down the line. So none of this is financial advice. I have a small position in GMX. It was 1% a couple weeks ago, but it's growing 3%. I'm only down 10%, like I said, and I'm also a long-time GLP farmer. There are risks involved. I spent 47 minutes making this video a couple weeks ago, so I'm gonna assume that you have a baseline understanding of GMX and GLP. To be honest, if you're not willing to watch this video, then you probably don't care enough to educate yourself. So I can't really help you there. So this is your agenda. I'll just do a quick reminder, briefer GLP. And then discussed more of the newer topics about GMX, relative performance, GLP buy and hold returns, and running Monte Carlo simulations for GLP to predict future returns. Okay, so GLP, and by the way, if you understand GLP, just skip the section, right? Just do whatever you want. But GLP is a basket of currencies that you can buy and provide liquidity for, so traders can use your liquidity to trade. GMX is a DEX, and it's also a perpetual trading protocol, so people can use your liquidity to trade on leverage and make swaps. So when you buy GLP, you're essentially the house, you're the counterparty to traders. There's risk that the traders win and drain funds from GLP, but historically it hasn't happened. Traders are just unprofitable on average, and I think I have some charts here. Yeah, so on Avalanche, traders continue to lose money. Arbitrum, traders continue to lose money. But for me, it's been a good way for me to de-stay into the markets, hedge my portfolio, farm Avalanche and ETH. I think as the market evolves over time, people wisen up to various types of protocols in crypto and DeFi. And I think, after a bunch of things nuked, I think more focus is going to be put into cash flow positive protocols, right? What a novel what a novel concept. But that's kind of what GLP is, and conceptually it's amazing, right? You get to hold this. I think I have, yeah. So let's kind of go over the composition of GLP. So this is on Arbitrum. It's roughly 49% stablecoins. Obviously, this varies depending on the volatility in the markets, but it's majority Bitcoin and ETH on Arbitrum. A little bit of Link, a little bit of Uni, but it doesn't really matter, right? And on Avalanche's side, let's go here. It's going to be roughly, where is it? 57% stablecoins. Some Avalanche, some ETH, some Bitcoin. Obviously, GLP on Arbitrum has outperformed GLP on Avalanche just because 12% weighting on Avalanche has not done so well. But that's kind of how it goes. But let's kind of quantify these things, and let's first talk about GMX outperformance, because recently GMX has hit an all-time high relative to its ETH valuation. So of course, like against the US dollar, I think it's down like roughly 50% from its all-time highs. But against ETH, it's at its all-time highs, and it's one of the coins that's really been outperforming the markets. And there's this entire meme about Arthur Hayes. Arthur Hayes has been really gobbling up GMX. So this is one of Arthur's wallets. He has multiple. This is like one of his bigger ones. I'm not gonna link this, but obviously you can look this up if you want to put some time into it. But he has over $4 million of GMX, and everyone's like saying, like Arthur's accumulating, because if you look at his history, all he's been doing is accumulating GMX. So let's look at his transaction 2 days ago. Go to Arbiscan. This is his wallet. Go here. Let's see. Yeah, and yeah, he's just every couple days he's just converting 100 ETH into more GMX, and he's been doing this almost every single day, almost. So the 13th, the 12th, the 9th. He's just accumulating GMX, right? So if the founder of BitMEX is doing this, then I would think that he has some insight on how a decentralized exchange, a perpetual trading exchange, can function. And obviously, I can spend all my time focusing on the fundamentals, tokenomics, data and whatnot, but I have more faith in Arthur figuring out whether this is a scalable model or not than some random pleb like me. Okay, so great smile, right? He's just buying GMX. Okay, so anyways, let's go into GLP buy and hold returns. And now I'm going to go back to my little friend here, Mr. Coin Data School. Make sure to give him a follow. I think he's very underfollowed. He's been posting in the Discord a bunch of times about, I don't know, he's like trying to write more, like do some more Python. And he has 2 articles that I want to go over. And the first is GLP buy and hold returns. So obviously, GLP is a good basket. 70% of fees go to GLP, 30% go to Sakers. And he wanted to, because he has a bunch of capital risked into GLP, he wanted to run some simulations to make sure that, he's not like randomly burning money, right? So the question he asked himself was, if I bought GLP and Arbitrum on such and such date and held until today, which is, I think, early July, right? So this is kind of outdated. July 10th, but it's still good data. And if I discarded the yields earned for holding GLP, what would be my return? And how would it compare with holding BTC or ETH, right? So relative outperformance. So for example, how you read this is, let's say, I don't know, like February 2022. If I bought GLP that day, I'd be only down 18%, while Bitcoin is down 25, ETH is down like 30%. If I bought GLP on April, right, the beginning of April, I'd be down 25%, Bitcoin down 33%, ETH down 44%. And recently the markets have picked up, so it's like performing that part, right? But this is without fees, right? So, but what if you incorporate fees, right? Because 70% of platform fees are distributed in ETH, the GLP holders, and what if you basically auto compound that, right? And this is not taking into account the GMX rewards. And if you take into account the platform fees, it looks like this, right? So, it's vastly outperformed BTC and ETH, GLP, right? Except the last couple of weeks, just because, in the past couple of weeks, people that bought, last year have accumulated more fees. So on average, they're going to do better, right? So GLP, I think it's a good play if you think the markets are going to go sideways or down, but you still want to maintain exposure into the markets. Of course, if you think Bitcoin is going to turbo pump from here, right, then maybe just spot buy Bitcoin. But if you're just a humble farmer, if you want just passive exposure into markets, and if you understand the risks of GLP, then this might be good for you. And similar example for Avalanche, GLP has underperformed just because Avalanche is in the basket. Suzu has been dumping this. Hopefully it's over. Theros, rest in peace, rest in pepperonis. Underperformed. But if you take into account Avalanche fees, looks like this, right? So on both Arbitrum and Avalanche side, GLP has been a good asset. I have basically all my farmings on Avalanche just because I have so much escrow GMX on Avalanche, so I just want to start vesting that. But if you're starting out for the first time and you have you don't have any bag holder mentality, or in hindsight bias, I think starting on Arbitrum is better, just because Arbitrum just has more exposure into the blue chips and less exposure into an altcoin like Avalanche. I like Avalanche, but in this market, I feel like it's gonna underperform. Especially I posted this yesterday, but I expect ETH mainnet DeFi to outperform. It's similar to, because the whole L1 thesis that I started coining and memeing into existence last year was that ETH gas fees are high. There's a lot of demand for block space, so let's go into these alternate L1s because it's cheaper. But when there's less demand for block space right now, right, it's cheaper to use mainnet. So why not use mainnet, right? Why would I use an alternative L1? So my idea is that I think ETH mainnet DeFi should lead alt L1s. So mainnet activity needs to come back for alt L1 block space demand to increase. And the video I'll make next week is going to be in one of these coins, so you can speculate which one. And I guess GMX isn't on mainnet, but the majority of the TVL is on Arbitrum, which is ETH L2, right? So I expect ETH mainnet, ETH DeFi to outperform. But that's also why I don't think Avalanche will do that well, even though I do think it could potentially come back. Okay, so there's that, and let's talk about this Monte Carlo simulation, right? Big words. And the question, right? This is the most recent article. He asked himself, how would 10K invested in GLP at its inception grow over time, assuming daily reinvestment of ETH AVAX rewards? So he kind of goes over his methodology. You can read through this on your own. I'm not going to bore you because the data is important. But the idea is, given historical performance of GLP, if we just do a Monte Carlo simulation, so if we just simulate a million times potential outcomes for GLP, what would be the probability distribution essentially, right? And this is the least squares regression line, right? Or I haven't taken math in so long, but it's like the average return that you can expect here. And let's go over this table, which I think will give a more digestible response. So if I bought, it's the same question, right? What would be your return if you bought 10K of GLP at its inception? So what he's essentially extrapolating, given historical performance of GLP, if I bought GLP today, how can I expect, the performance of GLP as time passes? And of course, the longer you are in GLP, the better you should expect. The better your returns you should expect, just because you're continuously compounding your rewards, right? So in 7 days, this is the expected return, right? It's kind of like a walk in the park. At the end of the day, it's just a basket of currencies, 50% in stable coins. But over time, if you extrapolate it to 120 days, the returns are more asymmetric to the upside. There are, more risk, just because in GLP, you're the counterpart of your traders. So if traders win a bunch, then there's a chance that you can just get wrecked down here, right? But this is like one of the reasons where you shouldn't go all in GLP, just because there are tail risks, there are smart contract risks. The team is anon, even though I think the team is very strong. But the concept is, if you expect markets to be sideways, slightly up, slightly down, and if you expect, or if you want like a buy and hold strategy that you want, then I feel like GLP is a really good one. So this is an Arbitrum, and what is this? Yeah, so what is probably my return exceeding, let's say 25% X days from now? Obviously, the longer you're in the markets, the better your return should be. And on GLP, it's a little bit worse, just because Avalanche has underperformed. And obviously, this data takes into account historical data. So, since Avalanche hasn't done that well recently, it's going to assume that it's going to continue to not do so well, right? But if you expect Avalanche, if you expect the majority of the selling to be over for Avalanche, then maybe you can expect this to be a lot higher, right? But you can do a similar thing here. A little bit more risky, right? Actually, compared to Arbitrum, it's a lot more risky. But yeah, I think it's pretty interesting. Of course, it's really sensitive data, right? So if tomorrow traders lose like $1 million on Avalanche, then it's going to incorporate that data, and maybe that data will like skew this significantly to the upside. And on the other side, if traders like win $1 million and GLP losers, or I mean, $1 million isn't even that much given the size of GLP. So if traders like win or lose $10 million in a particular day, week, then it'll skew the data, like obviously. But I think it's a good mental model, a visualization of what you can expect, even if you hold Avalanche and if GLP on Avalanche and Avalanche continues to underperform, you can expect something along these lines, right? Of flat performance. Whereas on Arbitrum, majority of ETH, right? If you want to hold ETH into the merge, you're scared of volatility, you want a more risk muted position, then maybe something like this is worth it for you. So hopefully this is a good video, get you a decent understanding of like what GLP is, the historical buy and hold data of GLP, as well as because this is this kind of backtesting, right? This is like what you would have done if you bought in this particular date, but this is more looking into, okay, if you buy now, what can you expect? And obviously there's so much variance, but on average you should expect the GLP to just outperform the markets according to this data. And given that, GLP should be a good asset looking forward, especially because not only are you earning fees, you're also farming GMX, which is outperforming ETH, right? So farming an asset that's outperforming the market is an attractive proposition. Of course, we're no longer in this market for Ponzinomic yields. So right now the yield is 70% on Avalanche, 11% on escrow GMX, and on Arbitrum side, it's going to be, let's check here. Yeah, 16% paid in ETH, which is, like if you're complaining about this, then you're just too greedy, right? Or your dopamine addiction is way too high. So there's that. So hopefully this video is useful. I haven't made a video or a public video in so long, so like I'm stuttering all over the place, but the data will speak for itself. So thank you guys for watching. Have fun out there, and be careful out there, and always be aware of the risks. Just understand that. Just watch this if you're unaware of the risks. There are risks. So yeah, have a good one. Bye bye.